RT. Hey guys, happy Friday. What a week. Oh my goodness. Welcome to Finance Friday. This is the show where we transform your relationship with your money by giving you need to grow and protect your wealth. I'm Amy Novakovich. This is Ryan Wilson.
Hey everyone.
He's looking up some stuff. We got a lot to go over today. It's been a really busy week. Share this out because I'm sure a lot of people are wanting to know what's going on. Why is this not popping up on my Nova? To share it out. But yeah, share it out. Follow us on Twitter at Nova Wealth Management, MGMT. Check us out on Instagram, YouTube. We have a whole bunch of short videos. And check out our website, novawealthmanagement.com. I'm really wanting to share this out and it's not popping up. Isn't that weird? You're going to have to fix all my technical difficulties. I don't know what's going on. We just moved into a new office, so we're in a brand new office. Wait, where's the microphone? It's way over here.
Can
you guys hear us?
No, we were loud enough. It's probably fine.
I'm probably loud enough if we put the microphone in the other office. And Jim's office is right here. So eventually, like another day, we wanted to go show you around the office, the new office. But today, with the market going crazy, I don't know if there's anybody out there, even if you don't follow the stock market, I wonder if there's anybody out there that has no idea that the stock market has fallen 4,000 points this week.
Yeah, I would.
Do you think there's anybody?
I would find that.
Anybody
surprising.
know anybody that did not know that the market has fallen 4,000 points? I mean, I feel like you said on Yahoo's homepage, there was a tab for coronavirus.
I mean, I got home last night and I was listening to the news, and they even talked in the same breath as talking about the coronavirus. And it hit the markets. And,
in the local news, right?
Yeah. So I mean, but you'd have to be under a rock to know. To not hear what's going on, at least a little. You
wouldn't know the level, but you might just know that the market has gotten hit. So, For those of you that don't know what that means, because a lot of people might say, 4,000 points, that sounds like a lot. Well, it's about a 14% drop, and that's a big one. So at 10%, we say we are in correction territory. Did you find a good one?
Yeah.
Good. See, now can you figure out why you're going to need my face? Yeah. Okay. Now, no. Oh, you already got it. You were sharing it out.
I was doing
Okay. Yeah. So this week, again, 4,000 points, about 14%. At 10%, it's correction mode, which simply just means the market is in a free fall.
Yeah.
And at correction territory, it is coming back a little bit. We moved it because we're going to go into the closing bell with you guys, which is why we're a little bit
instead of watching fake news, you can watch us and we'll tell you what's going on in the real world.
We'll analyze the fake news and bring reality
to it. We'll be like
a
filter.
The reality filter. Yes. So this has been our life. We live, eat, and breathe. Hey, RT. We live, eat, and breathe the market. So if you're going to get information from anywhere, this is a pretty good place to get it. So 10% on average comes around about once every 12 months on average. It has been 14 months. So December of 2018 was the last time we were in a 10% drop. That was actually a 20% drop. So it's been over 12 months. It's been 14 months. So we had been expecting a correction to come, whether it's a political headline, trade deal, or coronavirus. We kind of felt like a correction was due. Now, what do you do in correction? Now, do you panic and do you sell? And I think that goes back to time frame.
Yeah, right.
We were talking about.
Yeah, we talk about time frame, and I mean, if you're long-term investing, then really this is a good opportunity to maybe pick up some cheap options. Not options, but
not
cheap stocks or ETFs or the market in general. Opportunities. That's a good. Yeah, not options necessarily, maybe, but that's not what I'm recommending. I'm not recommending anything, but I'm just saying that really, if you're long-term, the fundamentals of the market still look good. Jobs numbers came out. Consumer spending is up. Above what was expectations. So
interest rates are still low. The 10-year interest rate I think fell to like 1.12.
Yeah.
Holy goodness gracious. So what does that mean? That means the 10-year treasury. So imagine if you went out and got a 10-year CD. It's different, but I'm just trying to give you a general idea of what a 10-year treasury bond is like. They would pay you 1.12%. So that just gives you an idea of how low interest rates are. So if you haven't watched our Finance Fridays before, if you're at all thinking of refinancing a mortgage,
now's a good time.
Now's a great time.
Yeah. And really, it's going to push a little bit more liquidity back into the markets because you can get stuff that are dividend back into the markets, which will bring the markets maybe back up. We don't know. There's still a lot to say, but a lot of this, I mean, I'd say the majority of this pullback is from this coronavirus fears. So we can kind of talk a little bit about that. And so I think that we're seeing a little bit of a slowdown as far as of new cases. But
let's talk about this.
China.
Let's talk about this.
Yeah.
Pull up your numbers that you have. How many total cases? How many deaths? How many total cases of the regular flu? How many deaths? Because we were talking last year alone, there was 32 million cases of the flu. How many hospitalizations?
It was like 280,000.
Hospitalizations of just the flu, guys.
And 18,000 deaths last year from the flu. From 2019, the year, which and it's seasonal, so it's really this time of year last year, basically.
Right.
Were those numbers. Now, that's a huge amount of numbers. The deaths, as far as percentages go, is
0.6%.
0.06.
0.6. No, 0.6%. 0.6%. 0.6, not 0.06%.
I think you're wrong, but that's okay. Either way, it's much less than 1%, which is a low amount. But,
under 1%.
But people, but a greater number have, died from the flu last year. This flu is right around 2% right now.
Yes.
Now, also keep in mind,
2%
death rate, keeping in mind that it did start in China and moved into some other Asian countries, and Iraq is another one. Iran, sorry. Iran is another one. And the healthcare in those countries is not
so much I want to say
ideal. And so those are things to take into account when you're looking at these numbers, and a lot more may come out as we see, it has spread a little bit into Europe, and there's been some cases in the US, and as people are getting healed from that, those numbers then will ultimately, hopefully, fingers crossed, will look better because the healthcare in a lot of these countries and the overall health of the people in these countries are better than they are in China and Iran and,
because outside of Asia and Iran, the only deaths and 15 in Italy, something like that. So outside of Asia, just so you guys know, the levity of this, okay? There's 2 in France and 15, I think, in Italy. I'm a little not positive on that, but it's in the teens. And so the point is that where there's areas with really good healthcare and people have access to healthcare, there is a very good recovery rate because it is just a strain of the flu. Now, the bigger case about this, I don't think most people are logging in and saying, am I going to get sick? I don't think that's what most people are watching this for. Most people are wondering, is the economy going to slow down? Is the stock market going to continue to lead? We have some comments.
Right, but in order to give those those answers, we have to kind of talk about the the reality of what's going on, and therefore will it be long-term effect?
Right.
Will there be a long-term effect?
And what does it take to be a long-term effect? Because they're already starting trials in 5 weeks of the vaccine. So they have created some different vaccines, and they're going to start human trials in 5 weeks. It could take 6-12 months to actually develop that vaccine. But the question is, if it's already starting to slow down, how long do we worry about this before we say, okay, it's slowed down enough, it's contained, and then we're going to get a vaccine? How long does it take to actually affect the economy? And how does it affect the economy? Well, it affects the economy because you have plants in China that are shutting down. You have schools that are shutting down. You have people that are in quarantine in different countries. Travel is starting to shut down. So then you're going to have a hit to the airlines, a hit to the cruise ships, a hit to any travel industry. Oh my gosh, look, it's coming back. What if we closed green? Well, we got 4 minutes.
That'd be crazy.
It's down 565 right now, guys. We're looking at the Dow. I mean, the S&P is a better representation of the economy because the Dow is 30 stocks.
And so that's down 1.7%, only 50 points right now. So so it's 500 stocks. It's making a move. We're seeing some go green. Companies in the green. Microsoft's green, up 1.3% right now.
Wow. That's really
so.
Nike, who produces a lot in China, is somehow in the green. So this is just showing you that, I mean,
a lot of it has been discounted already. So the market has already factored in like a pandemic, right? Which means
for sure
that it's going like more global, case. Right?
Yeah.
So we see a shorter, only maybe a couple months of kind of fear as these numbers start to churn out. And what a lot of people are expecting is that in countries like the U.S., people aren't going to be as highly. It's not going to be as severe because we have healthcare that can help combat some of the symptoms of the flu. Obviously, the flu being a virus, you can't just cure it.
Right.
It has to run its course, but we can with like Tamiflu and things like that. That's a
no, but with flu, it's just keeping you hydrated, making sure you rest and you don't push it. Things like that all contribute. All contribute.
Yeah. So I think that we're not, unless there is a crazy outbreak and we're not able to figure it out.
But the market was, when we started this live, the market was down 1,000 points. So it's already rallied almost 500 points. Yeah. So just to give you an idea of how much it's swinging. So how can you make money on this? So actually you kind of mistakenly mentioned options.
Yeah.
For those of you that have never traded options, please don't walk away from this show and go buy options. Please don't. But for those of you that know what options are or have an advisor that trades options for you, start to look at long calls on the S&P 500 going out like a year or two, because we feel pretty confident that a year or two from now the market will be higher.
Right.
And those calls will do very well. You can also buy what's called the VIX. It's the volatility index. Volatility is how much something moves up and down. When it really swings, it's highly volatile. When it's flat, there's low volatility. So you can buy the volatility index, which as of this morning was at 40. I don't even know what it's at now.
It was 45 at one point today.
And just in October, was it October? See, now I'm getting all my numbers mixed up. It was
down to like 8.
No, well, it was like 12 recently.
Yeah.
Like really recently. So you can make money there buying the VIX. You can look at large corporations that their balance sheets really won't be affected by China, but are just being hit because they're a stock. There's a lot of good options there. We're getting some comments. Let's see. Hey guys. Hey Carl. So there's a lot of things that you can buy to make money, but no matter what, I would suggest that you look at buying. If you're a longer term investor, again, these aren't recommendations, but something to have a discussion about. If you don't have anybody to discuss it with, you're welcome to call us. But certainly you get the answer from people when you say, oh, we're buying. They say, well, it could go down further. Of course it could. But a 14% pullback does not come around very often, guys. Like it may once a year. So it's not that often. This is where you make your money, not just riding the market up, because if you're going to just ride it down and not buy on the dips, you're not going to do as well if you were to actually buy on these dips. Like in December of 2018, we were buying like crazy.
Right. Yeah, and so, buying even if it goes down, if it's continuing to buy as it goes down, if you're a long-term investor, is not a horrible idea. You're kind of averaging down as you go. And
correct.
And so...
But explain what averaging down
So basically, as you buy it, your cost basis of that, say you have a bucket of funds, well, if you buy some at $200, you buy some at $100, well, then it averages down to $150, and so therefore you're making money sooner on that asset. And so that's kind of what is good for long-term investing. If you're 5 years out, this coronavirus, if it's an issue in 5 years, then we'll have bigger problems than worrying about an investment. I mean, if this is still this big of a fear in 5 years, we'll all be walking around in hazmat suits.
Yes, in bubbles.
Yeah.
I'm going to get a hamster wheel.
Yeah.
Yeah, and so the market, I think, just closed. It only went down 24 points on the S&P.
Yeah, 350 on the Dow. That's like what it opened at this morning, I think.
Yeah. This is the worst week since 2008, so it's been the worst week in 12 years. So again, just to give you an idea of the type of opportunity that we have here, worst week in 12 years. So you don't get these opportunities often. So please don't think that this is like a normal thing. It's not totally normal. A pullback is normal, but to happen this hard and this fast was pretty crazy. I want to explain real quick the reason why I think the market is bouncing back. So you have what you call technical indicators, and this is where I get a little nerdy. But there's levels, right? There's levels that all these computer traders put in.
Which is the majority of the market.
Right. Right, so these big hedge funds, big money.
70% of the trading in a day is by these big institutional investors.
So what happens is when you hit these support levels, as they call them, like the market will hit a certain level and always bounce back because that's where the computers buy. So today at 2850, which on the S&P 500, the last time we hit 2850 was back in October 8th, you said? So if we would have hit that level today, if we would have closed at that level, essentially this last just erased the last 4.5 months of gains.
Yeah.
So we had all those gains in the last 4.5 months. We just went back to October.
Yeah.
So in that, when you say it like that, it's not even that bad. We went backwards 4.5 months.
Yeah.
Like big deal. So now we're back where we were 4.5 months ago.
And we get the discount. It's
right.
Get today's goods for last fall's prices.
But it kept hitting that resistance level every time today. I bet it was like 8 times.
Yeah.
It would hit that level and bounce back because it's hitting those technical, which tells you this is computer trading.
Yeah.
So again, not something to totally panic about. Dow down 3,500. Now when we started this, it was 1,000 points. RT. Yes, it changed a lot in the last 15 minutes. But yes, if you have a lot of questions, if you really want to know more numbers, I mean, we could probably bore people. It's already been 16 minutes. We could already bore people with probably a lot more numbers. But what did you want to go over on that? That was just where the depths are.
Yeah, I was looking up to make sure, and there, this is up to date.
Because I said
the website
2
I'm
in
looking
France.
At. Yeah, so it's gone up in Italy. There's been a couple more today.
Oh, today.
And so definitely don't want to act like this isn't a big deal. People's lives are being lost. It's terrible.
Obviously,
but we don't want to overblow it, right? That's the job of the media to do.
You have to think about it in the scheme of the world economy and the overall risk to the world. And so when we're talking about, it's not a big deal, we're talking about the risk to the world. But obviously, yes, individual people's lives are being taken. Yeah. So obviously, yes, in that case, it is a big deal. But people's lives get taken from the flu as well.
Yeah.
So it's just, you have to look at it in a global perspective.
And just for perspective, too, currently there are more people that have been recovered and discharged from hospitals than have it still. And I think that's a ratio worth looking into also, is more people have been healed and are back home, and they're actually talking about opening back up the factories in China, and stores are opening back up. So they're even saying, okay, we're kind of seeing the light at the end of the tunnel, which is something that's worth looking at. But there are more people that have been healed from the coronavirus than still have it, which is a great thing. So and hopefully we keep seeing those numbers go. We see less and less people getting affected and more people being healed of it, and that's I think that is what we'll end up seeing. It was rapid, and we'll kind of have a little bit of a handle on it.
Well, and look at it this way, at least, I mean, we don't know what Monday brings, but if you would have went out and bought something at the beginning of this message, you would have been up 2% already.
Yeah.
But I mean, again, please, if you don't know what you're doing, don't just go do that. But it's certainly something that doesn't come around. What are you doing?
You saw where we finished?
Yeah, yes. We're kind of giving
we're
our
on the
own
live
little,
talking about it.
Yeah.
Nice.
Yes.
Commentary.
Tell everybody I said hello.
Yes.
Jim
says hi.
But yeah, and I think that's the reason to talk to somebody too is the reality is that money is emotional, and and so
for sure
it's our
your
job
own money is really hard.
Yeah,
to keep your
and even for us,
around.
we get emotional a little bit about it when we're it's this stuff is.
I've been sick.
Stressful.
Like in the middle of about 3 hours ago, Tamara was looking at me and I'm like, I'm just tired. Like it's hard to watch. It's hard to see money go down. At the same time, you also have to see the opportunity.
Yeah. And you have to be disciplined.
You have to be disciplined. You have to have a strategy. You have to have somebody looking out for you. It's definitely difficult to see and difficult to feel. But if it's long term, nobody blinked an eye over the last 4.5 months when you made 14%.
Yeah, right.
Everybody expects it. So even though you made all this money, everybody expects it and says, "Oh yeah, nothing, no big deal." But it's the same swing. Yeah. So you just have to look at it on both ways, that if you were already in the market, you just made 14%, you just gave it back, really, is what this is. And now you have an opportunity to buy. The market just closed, So in review, because we're already at 19 minutes, in review, so the market, if you haven't been following, the coronavirus has caused the market to really spike some fears, because obviously it is a pretty serious flu type strain that started in China. And the worry is that because it is in China, they're shutting down factories, they're shutting down schools, that it will slow down the global economy. But they are starting to contain it. They are starting to find ways to slow the spread, because now they do know how it is contracted. Is that the right word? Whereas they didn't know before. So that was also very scary. But a lot of things have been moving forward that are good. And so we're just trying to educate people on it, because in quite the panic. Guys canceled their trip to Puerto Rico because of the coronavirus. You know, so I'm not telling you not to do that. You have to do what's best for your family. But we are telling you in the market our opinion. Yeah. Right? That's what it's good for.
Wipe down your counters.
Worst month since February of 2009. Worst month in 11 years.
And it's all because of a week.
Wow. Yeah, that's pretty
It's really just because of this week. So
I think that's good.
Yeah, I think that's good. Questions, concerns, comments, let us know.
Let us know. Go to our website. You can go to the Contact Us button. There's also a risk questionnaire on our website. If you scroll down on the front page, there's a risk assessment if you kind of want to see where you fall and what kind of volatility you can handle. I defined that term earlier. That's an interesting thing that you can do. So
get to know where you stand.
Reach out to us, or, hopefully you learned something today. All right, guys, have an awesome weekend, and we will probably see you next week.
All right, have a great day.